Okay, I think we can probably get started. Uh, I'm gonna reveal something. I asked Carola to do this a long time ago. But the timing is pretty magnificent when we agreed to do this date, given the topic, given the interest in this in the world. So not to build you up too much, but I think everybody who comes to this will be familiar with your work. Um, you are now at UT Austin, so thank you for getting up even earlier than would have been the case on the East Coast. It is fantastic to have you. You are our pre-summer break presenter, so looking forward very much to this discussion of partisan trust in the Fed. Um, the usual rules will apply. So presentation will be about something around 40-45 minutes. If people in the audience have questions, if you just put them in the Q&A function, if they're sort of pertinent and I see a natural break, I will ask them. If not, we will just have a discussion at the end. We go at least till the hour, so at least till I'm in the UK, so 4 o'clock, 5 o'clock in Europe, and just add an hour to whatever the time is in the corner of your computer screen, wherever you are. And we have this little buffer of 15 minutes to just continue the discussion, but a hard stop at 1/4 past if we get that far. But, we usually finish somewhere in between there. Without further ado, do you want to share your slides? And I hand the floor to you, because I think this is going to be a super interesting discussion.
Sure. Yeah. Thanks so much, Michael. I'm excited to be here. Let me just share these slides. Gotta go to the beginning of them. That would help. All right. Can you see them?
I see them perfectly. Yep, excellent.
All right. Yes, so I'm now at UT Austin in their brand new School of Civic Leadership and also in the economics department. And this paper is joint with Cody Kocher from Hamilton College and Abby Smith from William and Mary. So we are presenting, yes, it was a timely topic when we started writing it, and it has maybe become even more so. It's about partisan trust in the Federal Reserve. To give you a kind of starting picture of what we're looking at, this is data from the Gallup poll. And every April, the Gallup poll asks people how much confidence they have in the Federal Reserve Chair, and they'll say, in Federal Reserve Chair Jerome Powell or whoever it is when they're asking. And what we're plotting here is for people by their political party affiliation, the share of respondents who say they have a great deal or a fair amount of confidence in the chair. And you can see a pretty clear pattern where for example, if you look at the last bit of this graph, when Joe Biden was president, the Democrats had more confidence in the chair compared to independents or Republicans. That was flipped during the first Trump administration. Trump was a Republican. Then before that, we had the two Obama administrations, and again, it was flipped. So the Democrats had more confidence under the Democrat president, and then flipped again during the Bush administration. So we have this clear pattern. It looks fairly consistent over time, where people who are of the same political party as the president also have more trust in the Fed chair. And you always do see independents having near the lowest amount of trust. Okay. So we wanted to say, well, why might partisanship affect trust in the Fed chair? And then also, why does it matter? It may just be that trust in economic institutions in general corresponds to trust in the current presidential administration. People also might be exposed to different sort of criticism depending on who holds the presidency. So maybe politicians of the opposite party or the media that's kind of leaning away from the president's party would criticize the Fed more when the president they support doesn't hold when the party they support doesn't hold the presidency. This could also have to do with just people's lack of knowledge about the Fed as an institution and its independence. So consumers might believe that the president influences monetary policy. They might not understand de jure central bank independence, or they might have doubts about de facto central bank independence. So they might perceive that the president is influencing the Fed, even if they know that the Fed is legally independent. So
Can I?
this could
Sorry,
be,
Carola. I
yes,
very rarely interrupt this early, but
that's all right.
it's a gap in my own knowledge. It's my own ignorance. Um, so to what extent, when this is discussed, say in the U.S. media, and obviously you're there and I'm not, um, is the political affiliation of the Fed chair themselves known and or articulated when discussing the Fed? So again, I have sort
Yeah.
of vague memories in my head that Greenspan was a well libertarian stroke Republican.
Hmm. Hmm.
Jay Powell is or has been a Republican or was seen to be a Republican, and Yellen a Democrat clearly, and Bernanke, I guess
Hmm.
maybe somewhere in the middle, maybe Republican. Is this known? Is it talked about? Could that be influencing things? That's just not on your list.
It's not on my list. Maybe I should put it on the list. My perception is that it's not much known or talked about. I think it might have been more for Greenspan, but just yeah, there's a different paper that's closely related to ours by Michael Weber and some of Pei Kwong and some co-authors, where their survey is about how people perceive the political leaning of the Fed. Um, and yeah, people have different views about whether the Fed is like itself mostly Republicans or mostly Democrats. So that's a little bit different like angle on this than we're taking. But yeah, I don't think generally like the average man on the street knows that, Powell had some, maybe was Republican or I think, yeah, Greenspan would have been most known as kind of having this free market kind of views. But I don't think it generally gets reported in the news that much or anything like that.
Okay, right. Sorry to interrupt
Yeah,
you.
no worries. Yeah, and feel feel free to keep at it with questions. So, one main reason we're interested in this partisan gap in trust in the Fed is that, could it possibly explain the partisan gap in inflation expectations, which I think is really important, and I'm going to explain a little more about. This is based on some of my previous work. So, especially in recent years, say the COVID era and beyond, there's a very striking partisan gap in inflation expectations that sort of mirrors this partisan gap in trust in the Fed. And in a paper with Rupal Kamdar and Jane Reingart, we argue that really this is one of the defining features of inflation expectations in the COVID era. Partisanship explains much more of inflation expectations than any other demographic characteristics, and even influences regional differences in inflation itself. So we think this partisan gap is very important. I'll show you a picture from that paper. The left is short run expectations, so 1 year ahead, and the right is long run, 5 to 10 years ahead. Again, this is Michigan survey data. And again, you see in the Biden era, if you're just looking at panel A, Republicans had much higher inflation expectations than Democrats, with independents actually quite close to the Republicans. And then that's flipped during the first Trump presidency. And there's kind of spotty data before that, but the pattern does generally hold that people who are of the party as the president have lower inflation expectations in the short run and also at the long run. And that it's a really big gap. Like, look in 2022 when you have Republicans expecting over 7% inflation, which actually turned out to be, more correct, and Democrats expecting at most about 4% inflation. So, we naturally wondered, well, can that kind of mirroring gap in trust in the Fed explain this partisan gap in inflation expectations? And short answer is no, but I'll get into that more. So in this paper, there's kind of two parts, one part using some pre-existing survey data and one part using a new survey. So with the pre-existing survey data, that's the Gallup poll and the Michigan survey, we do just carefully document what was pretty obvious from the first graph I showed you, which is that people have higher trust in the Fed when their preferred party holds the presidency, that independents tend to be the least trusting. We show that these partisan effects are actually larger than other demographic differences, but that if you control for central bank trust, that only very slightly moderates the partisan gap in inflation expectations, meaning this isn't really the driver of why Republicans had higher inflation expectations than Democrats during the Biden era. It wasn't just that they trusted the Fed less. Now, since these previous surveys only go to around 2023, we also conducted a new survey that was right around the inauguration of President Trump. So after he was already elected, so we could get some more recent evidence and more detailed evidence where we provided some information treatments about central bank governance and independence, and asked some open-ended questions to get a better understanding of this partisan gap in trust in the Fed. Okay, so I'll start with the pre-existing surveys. The Gallup poll and the Michigan Survey of Consumers both occasionally, though not always, ask questions about respondents' partisanship, their trust in the central bank, and their inflation expectations. So we're going to be making use of those occasions when they ask all three questions at the same time. Now, we categorize respondents as Republicans if they either say they're a Republican or they say they lean closer to the Republican Party, and analogously for Democrats, because a lot of people actually say they're independent, but then they say they lean one way or the other. The wording of these different questions varies across the two surveys. So especially this is important with respect to the Fed trust question. The Michigan survey says, compared with 5 years ago, do you have a lot more confidence now, a little more confidence now, a little less, a lot less, or has your confidence in the Federal Reserve System remained about the same? And they've only asked this 6 times, so twice in 2017, twice in 2019, and twice in 2021. Then, you're probably more familiar with their inflation expectations questions, which first they ask whether prices will go up, down, or stay the same, and then they ask for an expected percent change. For the Gallup poll, the Fed trust question is different. It's not about how has your trust changed over 5 years, but it's how much confidence do you have in the chair to do or recommend the right thing for the economy? And then they can pick a great deal, a fair amount, only a little, or almost none. And this happens in every April Gallup poll, so once a year. The inflation expectations questions here, one difference is that they ask about 6-month horizon instead of over the next year. And then the big difference is that there's no quantitative part of it. They just ask, do you think prices will go up a lot, up a little, the same, down a little, or down a lot? But these are in there every year. Okay, so for the Michigan survey, you can see the orange bars are people saying they have less trust in the Fed than 5 years ago, and that's actually the common answer. But it differs across parties depending on who is president. So if you just look at 2021, when we have a Democrat, Biden as president, Republicans are very likely to say they have less trust in the Fed, and Democrats are less so. But then if you look 2017 and 2019, when we had the Republican President Trump, you still have everyone saying they have, or people are still saying they have less trust in the Fed, but that's the more common answer among Democrats and independents than it is among Republicans. You get the same general picture from the Gallup poll. Here, instead, we're showing the balance share. So a higher number means more trust. And again, it's Democrats having more trust when there's a Democrat president, vice versa, when there's a Republican president.
Can I just ask on this as well? So the Gallup number seems to mix two things.
Mm-hmm.
One is competence, Like how much do they are they able to see the right thing to do? And the other is the sense in which they are, this, as someone who believes in central banks and independence and everything, I think this is difficult, but I think people would have this in their head that they are actually even benevolent. Like I could think a central bank governor is a really great economist who could do the right thing, but they're evil in some way. Do we have any sense
Okay.
of whether the political affiliation? I could imagine both are affected, right? If my team are in power, I think the
Mhm.
people around them are the best people, and they are working for me. They're like doing the thing for
Mhm.
me. Whereas when the other team are in, I think they're idiots and they're just not able to figure it out, or and they they're trying to serve some other interest. Do we have any sense of
Mhm.
which or
I
whether
mean,
both?
I have a sense from just reading the newspaper and stuff. So yeah, I can't separate those from the survey data here, but just the way that the right-leaning media refers to Powell, it's definitely more an incompetence than an evil picture. Like, don't they
Okay,
call him something like too late Powell or something? So
okay, fine.
there's these senses that like, oh yeah, he's always just flustering around and missing his timing. Not so much that well, I haven't read, stories saying that, oh, he was deliberately trying to raise inflation in 2022 or something like that.
Okay,
I think it's more the competence thing.
okay,
Um, and even like Trump's own rhetoric is usually like, well, I'm actually a successful businessman. I understand interest rates, implying unlike my Fed chair here. So, um, okay. All right. So next, we want to just say how big is this partisan gap in trust, and kind of can we compare it to other demographic characteristics, and is there still a gap when we control for other demographic characteristics that might be correlated with your political affiliation and also correlated with how much you trust the Fed? So this is a very simple regression. It's just regressing some measure of trust from the survey question on dummy variables, saying you're of the same party as the president and you're the opposite party of the president. So independence would be that omitted category there. And then other demographic variables. And we may either use a linear probability model or an ordered probit model, depending on what dependent variable we're using. Um, so if you just look at the first column here, this is with the Michigan data. Um, what's the chance that you have high confidence in the Fed? It's much higher if you're of the same party as the president. It's actually higher also if you're the opposite party relative to independents. So again, confirming independents are the least trusting of the Fed. Maybe they're independents because they don't trust, institutions in general. And you can also see that this partisan gap is higher than, for example, the gender gap or even the education gap or the income gap, for example, and qualitatively similar takeaways if you use different dependent variables. Also, very similar takeaways if we use the Gallup data, which is reassuring just because, these questions about trust or confidence are asked in very different ways, but we still find qualitatively the same thing, which is that people in the president's party have higher confidence, um, the independents have the least confidence, and these partisan gaps are bigger than these other demographic gaps. This, different columns are using time fixed effects or not, and different demographic variables or different, sorry, dependent variables. Um, we also wanted to see with the Gallup data, how does this partisan trust, um, these partisan patterns of trust change over time? So we split our sample into three periods: pre-2008, 2009 to 2019, and then the 2020 and beyond period. And the one real difference is that if you look at column 3 versus columns 2 and 1, you no longer have independents being the least trusting. You instead have the people who are the opposite party of the president being the least trusting. So this is like during column 3 is the Biden administration. And then you had Republicans being the least trusting of the Fed during the Biden administration, Democrats the most, and independents they're in the middle, but closer to the Republicans. Yes, and the same pattern again comes from the Michigan survey. We have less of a time sample there, but we do see that in 2021, the partisan gap is a bit larger than in 2017 and 2019. Okay, so what we do next is we want to see whether this partisan gap in Fed trust can explain the partisan gap in inflation expectations. So we're going to basically modify the regression that we ran in my paper with Kamdar and Reingart. So in that paper, we regressed inflation expectations on these party variables and demographic variables. What we're going to do now is rerun that with the data we have, but then also control for trust and see how much that moderates the partisan gap in inflation expectations. So if you look at the first 3 columns here, these have no controls for confidence or trust in the Fed. This is the Michigan survey data, and the first column is using the full-time sample. We see that respondents who are of the same party as the president have the lowest inflation expectations. Those of the opposite party have the highest inflation expectations. If we move over and compare column 1 to column 4, well, in column 4, now we've controlled for how much the respondent trusts the Fed. And you do see that if they trust the Fed more, they have a little bit lower inflation expectations. However, this doesn't really change the coefficients on president party and opposition party, which means that it doesn't help us explain the partisan differences in inflation expectations. So yes, there's like 2 takeaways. One is that trusting the Fed more is associated with lower inflation expectations, but it doesn't explain the partisan gap in inflation expectations. This is the same regression, but the dependent variable is long run inflation expectations. And the takeaway is the same. Respondents who trust the Fed more have lower long run inflation expectations, but we still see the exact same, or almost the exact same, partisan gap in inflation expectations. So there's some other reason besides a lack of trust in the Fed why Republicans expected higher inflation during the Biden administration, for example. We get the same takeaways from the Gallup poll as well, even though that inflation expectations question was just qualitative rather than quantitative. Okay, so next, let me tell you about our new survey that we used to get some more recent evidence and be able to ask a bit different questions. We conducted our survey on Prolific, which is a survey platform, and we did it in 2 waves. So the first was January 15th, 2025, shortly before President Trump was inaugurated, and the second was shortly after on January 25th, 2025. In both cases, he was already elected, so people already knew that there was going to be a Republican president. We had 3,145 adult respondents, and Prolific aims for a nationally representative sample in terms of sex, age, political affiliation, and ethnicity. So before we gave any information treatments, we collected some basic information on demographics, news sources, some perceptions and expectations about respondents' personal financial situation and their expectations of some macro variables. And we use the same wording as the New York Fed's survey of consumer expectations on these questions. We also asked how familiar they thought they were with the Fed, their satisfaction with the Fed's COVID response, and their satisfaction with the Fed's control of inflation over the past 3 years, all of those on a scale of 0 to 10. Then we gave respondents, we either randomly assigned them to a control group or gave them one of four different information treatments. The first just told them that members of the Board of Governors are nominated by the President and approved by the Senate, and told them that the most recent Fed chair was appointed by President Trump and reappointed by President Biden. The second also told them the first sentence about, they're nominated by the President and approved by the Senate, but that recent nominations have been approved on increasingly partisan lines. And both of these treatments are true, but the second we thought would maybe make the partisan nature of the appointments and approval process more salient, and the first would make it more like the bipartisan kind of nature more salient. The third was that something that was in the news a lot when we were running the survey, that members of the press had speculated that President Trump might try to replace Fed Chair Powell early in his presidency. And the fourth said the same thing, but added that Powell had stated that he would not resign if President Trump asked him to do so. And that was, that was published all over the news when it happened.
Can I just ask on that fourth treatment, do you
Mhm.
think people understood that actually it would have to be a request that was complied with? I mean, that Fed independence is strong enough already that until the chair's term is up, the president really can't, beyond duress and
Mhm.
expressing a wish, they don't have a direct lever, which I think actually would often surprise many normal people. The idea that it is true in fact, in Europe, it's even more difficult for the European Parliament to do anything to the ECB. The UK, the Bank of
Mhm.
England governor can only be removed in really emergency situations, which we've never seen
Mhm.
anything that got close to them since the bank's been independent. So, do you think they understand that?
Probably not. I think that it was a little, I mean, when this was happening, there were all these think pieces about, well, could he, could Trump still demote Powell so that he's not the chair, but he's still on the board? And that was, I think, kind of an unresolved question. So I'm not sure how obvious it was to anyone. Yeah, but probably most people didn't understand whether it had to be a request or not.
Okay.
Yeah. So post-treatment, we asked two main questions. One is, how much do you trust the Federal Reserve and its ability to stabilize inflation, from do not trust at all up to 10 fully trust. We wanted to be a little more specific in what sort of trust we were asking about. And then we asked, do you believe that the Fed is independent of political interference? We solicited density forecasts of inflation, and we asked, how do you expect the election results will influence the level of inflation, where they could say increase, decrease, or no impact. And then we asked for an open-ended response of, explain why you think that. And we finally collected their political affiliation. Um, so first, I just want to kind of show you that there is some relationship between how familiar people are with the Fed and how satisfied they say they are with its inflation response and with its economic response during COVID. So people who are highly familiar are more satisfied with the Fed in general, and that seems to be true both for Republicans and for Democrats. You can also just see that, remember, our survey was just in January 2025, and the Democrats, regardless of familiarity, were much more satisfied with the Fed's response, inflation, ability to deal with inflation and with the economy, which, this was very early in Trump's presidency, but it is different than the usual pattern because we had now a Republican president, but Democrats being most satisfied with the Fed.
But I mean, I guess one response to that is that
Yeah,
this is at the very
this is
start of a new
backward.
presidency, and you've asked them to look back. So they're
Yeah, so that's yeah, I don't think this is surprising because this is a yeah, a backward looking question. And you'd very easily interpret this question to mean, yeah, how satisfied are you with how the Fed was
under
when
your
Biden
time.
was president? Yeah.
But just I
Yeah.
don't know if you note, I was sort of as soon as you put this question up, I was sort of interested to to know what the constant was in this regression, right? I think it was a 1 to 10 scale. Is that about right?
I think it might have been 0 to 10. Let me see.
Or maybe I
Um,
0 to 10. Yeah, there it is.
yeah, 0 to
Um,
10.
so,
Mhm.
but was the mean like real low for everyone? I mean,
Oh, that's a
I
good question.
I sort of imagine it's an interesting chart given as in every other advanced economy
Yeah.
apart from Japan, that was a period when we saw inflation that countries had not seen for a long time, and so this was like there's a generation of people waking up to inflation for the first time, and then there are others who got flashbacks to 70s and 80s when they had high inflation, and so I imagine that this thing plummeted, but I don't know. So it would be interesting to know what the constant is in this.
Yeah, good question. I don't remember it off the top of my head, but I could easily just see what's the yeah, what is the average score
Yeah, yeah.
at
Okay.
on this scale of 10. Um, okay. So we've now split up these answers into the two survey waves, so the right before and right after inauguration, and by party. And we're looking at how much they trust the Fed on average. And this was the question about trust the Fed to stabilize inflation. Um, there's not too much difference pre and post inauguration. Um, you do see that independents have the least amount of trust, followed by Republicans, with Democrats at the top. And here you can kind of see like, okay, about 4 or 5 out of 10 trust in the Fed to stabilize inflation. So it's not zero, but it's also not very high on average. Um, okay, so we had these four information treatments, and they really didn't do much for us. Um, I mean, there was no treatment effects on inflation expectations, so I didn't put a table here. The of the four treatments, only one of them sort of affected trust in the Fed, and that was the second one where we said, that the president appoints, the Senate confirms, and these confirmations have been on partisan lines. That does seem to have somewhat reduced trust in the Fed and the perception that the Fed is independent. But mostly these treatments did not do much for us. So providing some kind of basic information about institutional arrangements, or one-off statements by Trump or Powell doesn't seem to really shake up how much people trust the Fed or view it as independent. Um, just looking at the first two rows, you do see, as in these questions also, Democrats have more trust in the Fed to stabilize inflation and also view the Fed as more independent than do Republicans or independents. Okay, so what we thought was interesting was respondents' open-ended explanations of why they expect the election to lead to either decreased or increased inflation. So first, for the respondents who said they expected inflation to increase post-election, this is just a word cloud showing what did they most frequently talk about, and the two big things were, well, besides just the word inflation, were Trump and tariffs. If you look at the respondents who expect inflation to decrease, again, it's Trump, and then kind of a variety of other things. Biden is in there, business, believe, so they just believe Trump will reduce inflation. We split these up a little. So what we did next was come up with 8 different categories. that respondents talked about in their answers. Um, and then what they based on their political party and what they thought would happen with inflation, what categories they tended to talk about. So you see for Republicans, most of them thought that Trump's election would decrease inflation, and they mostly talked about just Trump himself. And it would often be things like just President Trump knows how to bring inflation down. President Trump was a good businessman. He'll bring inflation down. So they were often very just one sentence like President Trump will do it, right? Um, for Democrats, the vast majority of them thought that the election would lead inflation to increase. They most commonly also talked about Trump, again, the same way that the Republicans did, where it was just like, I just believe that Trump will increase inflation. Or the most common was tariffs. So 44% of them said something about tariffs would increase inflation. So views about tariffs were very big here. And there was what is that? Like one in five or so Republicans thought that the election would increase inflation, and they also thought that that was probably because of tariffs or fiscal policy.
Can I say on that again? Watching from across the pond, the sort of story that you often almost hear portrayed is that there are people out there who so believe in the project, the Republican project under President Trump, that they think tariffs will reduce prices. This goes completely against that, right? This is a fairly I mean coherent reflection of the fact that tariffs, if enacted, would lead to higher prices, which I think at least some of the sort of pop media stories that you might hear on this seems to go the other way. Obviously, the Democrats are stronger in this belief, or attribute more
Mhm.
likely effects to tariffs. But where they acknowledge tariffs, the 25 to 2 sort of ratio is quite
Yeah,
actually instills a lot more confidence in me about like people understanding the sort of economic trade-offs and choices that they're making. I guess the other thing that stands out, you mentioned it, is the fiscal, where it's
right.
very strongly that people have a fiscal equals inflation kind of narrative in
Hmm.
their head. I mean, the zeros for both Democrats and Republicans as fiscal can be
Yeah.
an inflation reduction tool is quite striking.
Yeah, I definitely agree. So you don't have really anyone, you have people who don't associate the tariffs with inflation, but if they do, they think that it will increase inflation. You don't really have hardly anyone, I mean, who thinks that tariffs will reduce inflation. And you also, yeah, you literally don't have anyone who thinks that Trump's fiscal policy, I guess maybe they're thinking tax cuts, is going to decrease inflation. If they do think of it at all, they understand that it will increase inflation. Um, so yes, that is, I guess, reassuring. Very few people mention anything about monetary policy, though. And you might think like this is kind of an upward bound because we've asked all these questions about the Fed and sort of primed them to say something about monetary policy, and they still barely do. Um, a handful of people say that deportation will increase inflation. Nobody thinks that that will decrease inflation. Okay. So I think my timing was pretty good here. I'm already to the conclusion slide, which will leave us a good amount of time for questions. Um, so trust in the Federal Reserve displays a fairly large, significant partisan gap across time, which is larger than any difference in demographics. However, partisan differences in trust in the Fed are not the main driver of partisan differences in economic expectations. And in these slides, I showed you just inflation expectations, but in the paper, we also have some additional ones like unemployment rate expectations. Um, Now, the partisan gap in Fed trust did not reverse soon after Trump's election and inauguration. although the partisan gap in inflation expectations reversed basically instantly following the election. So, yet it's possible that we just haven't waited long enough and that, give it a year and Republicans will trust the Fed and Democrats won't. That seems a bit unlikely to me, given the kind of rhetoric that the president has towards the Fed. Although, he had similar rhetoric in his first presidency, and we did some comparing like early in Trump's first presidency to later in his presidency, like before and after he started tweeting about the Fed, and that really didn't seem to influence Republicans' views of the Fed. So it could be that most people just aren't even um, aware of that at all. But yeah, if I had to guess, I would say that Republicans will continue distrusting the Fed more than Democrats, even if we run this survey in a year, which maybe we ought to do. Um, we also, this was one of these cases where, you run your own RCT with some information treatments and sometimes you don't find much treatment effects. That's, that would be my short summary of what happened here. These simple information treatments that gave people some information about um, Fed independence or Fed governance didn't really do much to reduce the partisan gap in trust or in inflation expectations. Um, Probably because there's more to it. It's not just that people don't realize that the Fed is independent, so they associate it with the president. There's more going on. Um, and then based on those open-ended responses that we collected, there's high salience of the executive branch in shaping people's inflation expectations. They're much more likely to think of the president and his policies than the Fed and monetary policy when they're thinking about where inflation is heading. So, things like tariffs or fiscal policy are going to be much more top of mind than monetary policy. So even if there are differences in how much people trust the Fed, if that's not really what they think of as driving inflation, um, then you're going to see that partisan gap in inflation expectations, regardless of what people think of the Fed.
Excellent. Okay, so we have a couple of questions that have come in. I've got a couple myself. We have at least
Okay.
15 minutes or so we're going to get through them. But before I even get to them, I'm going to ask, uh, Mohammed Kuram Shabir, you've asked a couple of questions, and I was just wondering if you could expand on two things, because you mentioned something in the question called fiscal psychology theory, and I'm going to display my ignorance and say I don't know what it is.
Mine as well.
I don't even know how to ask Carola the question. And also, I mean, I think generalizing to other countries is an interesting question, but you mentioned distinct political economy structures, and it'd be useful to add a little bit about specifically which ones. However, I'll come to the other questions as well in a sec. This is where I'm gonna juggle the ones I have and the ones that are in there while giving Mohammed Karam Shabir a chance to add a bit of color to his questions. Like your last bullet point, let me just say, I had written down this big question, and the way I do these things is as I write my notes, I circle things in red as things that I definitely want to ask. And as soon as you had the result up, where essentially I think it was 3 or 4% of people in total thought monetary policy would play a role
Mhm. Yeah.
in, yeah, there it is, 4% and 3% in generating. And okay, so maybe a few more Democrats thought they could reduce it. It and then I have now written salience of the executive branch, I think is a very nice way of summarizing this. Is this a
Mhm.
problem? Like this seems like a real, like, I mean, maybe this is just hugely disappointing to someone like me who spent 25 plus years thinking about economics and thinking about central banks in particular and sort of view them as having
Mhm.
this really key role in the nominal side of the economy. And the world out there just
Yeah.
doesn't seem to. Like, we attribute it all. I'd love to see this, by the way, I'd love to see this result for other countries because it would be super interesting.
Yeah, I mean, I think part of what this, like another way to put it is that you and I think we're in this regime of monetary dominance, and people don't realize that we are. And I don't think that the media or the politicians themselves are much helping with that. Like we called a bill the Inflation Reduction Act that had nothing to do with monetary policy. So, the idea that people think it's fiscal policy that and regulatory policy that matters for inflation is, you can't really blame them for that. Is it an economic problem? Uh, Maybe not so much as long as we stay in the monetary dominance regime. Like if price stability remains delegated to the Fed, they continue trying to counteract any of fiscal policy's effects on inflation by bringing it back to inflation target, then that's pretty good. But just kind of the like political legitimacy of it is a bit troubling if people are sort of falsely crediting or falsely blaming the president with economic outcomes that have been delegated. That's there's something troubling about that. The role of Congress in all this is a little bit obscured, but fiscal policy is actually, that's Congress's policy. So when I said salience of the executive, that's sort of true for tariffs, but it's really Congress making the fiscal policy, also Congress um, that has, by the Constitution, responsibility for regulating the value of the money, which that's price stability, I'd say, is part of that. They've delegated it to the Fed. People don't understand that as far as, you know, people also have this dissatisfaction with democracy, probably partly because they don't understand how this works. So yeah, I think it is a problem. It's not obvious like the economic problem of it, but the political problem of it.
Okay, I'm gonna go. There's one question that's sort of come in at least twice, and
Mm.
that's essentially the challenge that you face in distinguishing between trust in the Fed versus trust in government or wider
Mhm.
institutions. And so, one question is, aren't Democrats more inclined to trust the government than Republicans? And the other, um, from Dimitri was, can't it be that the Gallup respondents just aim to demonstrate their general support of their party and not really the opinion about the Fed? Now you have this time variation which kind of helps you in answering this, but I mean I guess you have these
Mhm.
other controls as well, right?
Um, yes. So I mean, I think partly there is that, like, this is why the independents, for example, have the least trust. They have the least trust in just institutions in general, which is why they don't want to associate with either of the parties. Um, we did at one point, and I can't remember if it made it into the paper. If not, I'll probably add it back in. There were some other questions about trust in roughly orthogonal institutions in some of the Gallup polls that I remember we looked at, and you do see, like, I think maybe there was like trust in the FDIC or something like that, like some other institutions. You do see similar patterns, but they're sort of bigger for the Fed. So, and they're not perfectly lined up. So I don't think it's just about well, people want to use the survey to say like, yes, we love the government or no, we hate the government. Um, you do see uh so there's something different about the Fed question, but I could try to go into some more detail with that and see if I can get at that question a little more.
Okay, I'm gonna go to one more, which is I think related to this, which is from Sami Diaf. Uh, yeah, basically saying that partisanship towards central bankers is getting, increasingly multidimensional across different, like political, you're talking about now, but educational, sort of other forms of
Mhm.
ideological. Um, and I guess it's a sort of a research methodology question. How much does that make it hard to quantify this stuff? And sort of how much, how can we improve, I guess, surveys and other methodological approaches to be able to do this consistently? I mean, you already alluded to it.
Mhm.
One challenge we often have is these questions are asked intermittently, so and in different
Mhm.
ways. So there's a lot going on, I guess.
Yeah, I mean, one promising sign is just that the Michigan survey, which the great thing about that is it's been running since 1978, every month, pretty consistent questions. They now ask for at least partisanship every single month. So I think they've realized that that's a very important driver of expectations, important enough to include it in every survey. So at least for things like inflation expectations, we can regularly track how they vary with partisanship. They have not, as far as I know, um, kind of re-added any questions about Fed trust, which I would love it if they did, but I don't really have any any sway there. Um, yeah, for these researcher-run surveys like we did, our open-ended question, like we didn't do anything particularly sophisticated here. I imagine well, I've seen some work on like researchers using AI to even help survey people, like AI run interviews basically.
Oh wow.
I don't personally know how to do that, but you could have the AI, tell the AI like interview this person and figure out exactly what they think about the Fed and why, and it could go and ask different follow-up questions and then quantify the responses in some way. I think that sounds really cool. It would be a way to get more detailed info out of people at lower cost. So I could imagine something like that. Or um, yeah, but there are these different dimensions about like what do we exactly mean by trust and confidence, and um, there's a trade-off between like, do we want to ask the same question at some regular time frequency every month to a lot of people, or do we want to ask a bunch of different questions to get at different dimensions there? Um, there's some value in both, so I think it just is something that researchers have to decide. It would be nice if, yeah, if the regularly run surveys could ask some of these questions because, personally, I can't run this survey myself every month or even every year, but some people might be able to.
Yeah, it's interesting. So the first time I started using questions like this in work like this of this sort was looking at the Bank of England attitudes to inflation survey, and
Right.
that's been running for quite a long time. It's not mission
Yeah.
level, but what you do find in that, and it sort of goes to the point, and I haven't checked either, so I could go back and try and find it, but you definitely find that there's this high correlation in these trust type answers that
Hmm.
that share across things like socioeconomic indicators, income, education. And so actually cutting between which of them is driving it becomes really hard because of course they're correlated.
Right.
But maybe that's just the endogenous outcome that all of our models would sort of predict, that you make different choices through life because you're in these, either lower education or lower income, and then you view government in different ways, and then as a result you make respond to these surveys in different ways. I guess it's just, yeah, it's a
Mhm.
hard thing to cut through. I'm gonna go one more question from my old friend Mohammed Boulate, who mentions the Mian Sufi and Hushku 2023 paper and says they found the partisan gap in inflation expectations amounts to mere cheerleading and does not influence household behavior. Could partisan trust uh, have a greater impact on the on behavior?
Okay. Yeah, I mean, I'm mostly familiar with that paper. I think we're looking in particular at whether consumption behavior varied with these partisan differences in expectations. And since they didn't find any significant differences in consumption behavior, they said, okay, maybe this is partisan cheerleading, which is basically like a survey. You're taking a survey, they ask you how good you think the economy is. If you like the president, you want to kind of cheer for them by saying the economy is doing great. But that's kind of meaningless in the sense that that's not going to make you spend anymore. Um, in the paper with Reingart and Kamdar, we did find some actual differences in inflation outcomes by region depending on their political composition. Um, so we use an IV strategy in that paper to try to actually identify the causal effects of inflation expectations on inflation at the metropolitan level. And we did find an effect there. So maybe um, it might not be showing up in consumption behavior necessarily, but maybe in price setting behavior or in wage setting behavior. So I don't think I mean, that doesn't say that none of it is partisan cheerleading. I think a lot of it's probably partisan cheerleading, but I think there's something real there too. Like when there were the debates about whether inflation was transitory or not in 2021, 2022. I don't think people were just saying, I like Biden, so I'm going to say it's transitory, or I don't like Biden, so I'm going to say it's permanent. Like people really did believe that to at least some degree. If we think our models are at least somewhat right, that people do respond to their inflation expectations at all, then there should be something meaningful there. We found empirically that there seems to be something there. So maybe Democrats didn't really think that inflation was going to stay perfectly flat in 2022. Maybe Republicans didn't really think it was going to be 8%, but I think there was some real difference in their belief that they would have responded to.
Okay, in the absence of more information, I'm just gonna tell you, I've quickly Googled what fiscal psychology theory is, which I had not come
Okay.
across. And Google's AI overview tells me
Okay.
that it explores the psychological factors influencing taxpayer behavior and the relationship between citizens and their government regarding tax and spending. And then talks
Okay.
about, it investigates why people pay taxes or don't, and how that depends on their beliefs
Hmm.
perceptions of fairness and justice influence compliance, and equally about, I guess, spending and tax morale and social context. So I guess, yeah,
Hmm.
so just to acknowledge, I think what you're doing and what many of us do in this world where we think about trust and these things, and there's a sort of this is operating in the background or something like this, even if I'm
Hmm.
not familiar. Yeah.
Yeah, even with what people think well, okay, so the way I'm interpreting that, like some people might think that certain forms of government spending are socially just or morally correct. We should pay our taxes because it's good to provide unemployment insurance, or we should pay our taxes because it's good to have a strong national defense. There's different reasons for what kinds of spending they view as correct. I think there's similarly with even with views about inflation, people of different parties or kind of persuasions might, say, well, really the only fair thing is to have 0% inflation. Like, why would you define price stability any way else? And then others would say, um, no, why are we prioritizing stabilizing inflation over when what we really need is full employment? So there are these definite, like, different kind of moral attitudes towards inflation and monetary policy that I think do align um, pretty well with political party. I'm not sure if that's what the what the question was getting at, but um,
Yeah, no, I think that's once I looked it up. I gotta. We've reached the time, so I know some people have to leave at the hour, but I try to get through all the questions from the audience. So I'm gonna leave the last couple of minutes just to. I'm gonna ask or make one comment and one other question, and the last
okay,
one being the really hard question that I'm just gonna throw out there and let you do what you
okay,
will with. So what I found, one of the results I found very interesting was the sort of the treatments didn't seem to drive trust. And I think you used the term like institutional facts, and
hmm,
the way I would interpret the facts that you're giving them are really about the appointment procedures, how these people get in office, how we have a Fed chair, etc.
hmm,
It's interesting because in some work I did with Ryan Rolls and Peter Rickards, we had a control group that was telling them really about functions. So they're sort of institutional
okay,
facts, but a different set. And we actually
hmm,
found that those did matter for people's responses to questions that the Alan Blinder sort of definition of credibility has. So, like, people became convinced and stayed convinced for like at least at the 20-week follow-up that the Fed did try to fight inflation. They did set interest rates for the good of the country, which I think is I find, I don't think these are in conflict at all. I think it's just, maybe our own obsession with independence of process and appointment might not be other people's, right? What they really want to know
Mhm.
is the Fed chair doing their darndest to get inflation under control and the economy working well for us the people, or you the people,
Mhm.
in the US case. That was just sort of a comment, and let me give you the question, and then you can work with those as much as you want.
Okay.
Question's the hard one. For those still here who don't know it, I think you're the first person I knew who was working on the issue of media and monetary policy in a variety of earlier papers. And so this to me screams that there's a challenge here, but also that if we think the world has become a little bit more echo chamber, a little bit
Mhm.
more, virality within that echo chamber, it also seems like this could be a really hard problem for the Fed to fight.
Yes.
Again, maybe every generation says this, but it seems like we've entered a new era of biases, partisan biases within official media, and of course we have this echo chamber social media world. So I guess here's the
Mhm.
hard question is, Jay Powell calls you into his office tomorrow and says, to celebrate the 4th of July, I want to really think about how I get this message out. Is there an answer?
Um, I what I've kind of uh hinted at previously, I think I've said in comments at previous events like this, is I think maybe the Fed just needs to worry less about that and just keep focusing on price stability and say like, okay, some people are going to not trust us, not like us. Some people are going to criticize us. Some people are going to give credit to the president for what we do. But if people don't really understand that much about inflation or monetary policy, they don't really want to. They're not going to follow, the Fed on Twitter. The best the Fed can do for those people is just keep prices pretty stable, because that's going to be the best way to reduce those people making financial mistakes and also reduce their need to know that much about the Fed. Because yeah, I do think it's really not an easy game and maybe not one that we want to get into of the central banks uh have to make like catchy YouTube videos and TikToks and get people paying attention to them. That's only really going to open them up for more criticism, like stick to their knitting, I think is the expression. I mean, I am doing more work on media and how media coverage of inflation shapes inflation expectations is a project I'm working on right now. But you do see the kind of um, like echo chamber sort of effect. The paper that I talked about here a couple of times with Kamdar and Reingart, we did look at how different CPI announcements in the COVID era influenced the inflation expectations of Republicans and Democrats. And if you look at the really big announcements where there were big upward surprises in the CPI, they got reported on very differently in Fox versus CNN. So the biggest upward surprise in the CPI raised Republicans' inflation expectations like the very next day. We were looking in narrow windows around the announcements. It actually reduced Democrats' inflation expectations, so it widened the gap and then we looked at what was actually being reported on the news, and the right-leaning news was just like inflation so much higher, like this is a disaster. And then the more left-leaning is saying, well, there's base effects. The CPI was low last year, so economists that we interviewed say this is just reflecting base effects and like emphasizing like no, inflation's going to come down. So I do think media is a big deal there, but it's not so much the Fed's job to try to fix that problem. They can probably help by making sure the kinds of things they say and the things they put on their website are easy enough for, reporters to understand. So that's their kind of transparency duty is make the stuff that they do publish comprehensible and true to the best of their knowledge. But then beyond that, it is sort of up to the media. So their mandate is the price stability and the full employment, and that's what they got to just stick with.
Okay, good. That seems like an optimistic or enthusiastic support for getting on with the job and delivering on the mandate as the first order
Yeah,
task of the Fed. I think now is a good time where we've used about half of the buffer, and this is a good time to end it. Thank you so much for coming on. Really enjoyed this incredibly timely material. For those who don't know, if you want to hear more of this stuff, Carola has a book called Shock Values, which gives a nice sort of history of inflation and society and politics in the US going back a long time. And even if you're not in the US, I think I may have mentioned this to you before when we spoke, but I actually think it's still useful for people in other countries to read. I think, even though, there's a lot of institutional detail that's specific to the US, but the general themes I think actually echo experiences in other countries and are lovely base. So if you're interested in this stuff, I recommend the book
thank you.
totally. And on that, particularly to our friends on your side of the pond, I wish you a happy 4th of July for tomorrow
Right.
in advance. And to everybody else, I wish you a happy summer. We will return only in September because we will now have a break in August. But yeah, hope everyone has a good time. And yeah, we will see you all again soon. And I've just knocked something over off my desk if you heard a big crash. But yeah, thanks again, and see you all after the summer.